Hello, it's Mike Ojenir, CEO of Serabi Gold. It's the 5th of February 2026, and I'm pleased to be speaking to Matt at Crux and giving you an update on where we are and all things Serabi Gold.
Mike, good to see you, sir. It's been a while, but what a ride! You've had a wild ride for the last 2 years, straight up. The shares have risen to, I think, never seen before heights. Can it continue? That's what we're going to try and find out today. So it might be worth kind of helping people some new stories so understand what happened in 2025. You put out your numbers recently. Can you give us a reminder?
Yes, it was a great year, best year ever for Serabi. Historical production, 44,000 ounces, made guidance. Our previous best was just over 40,000, so we smashed that. Record cash generation, started the year with about 20 million, ended the year with 54 million, and that after funding a big exploration program which went on in 2025, the first of 2 years of our big exploration effort which we're doing. So a great year, and more to come.
Okay, well, like I say, I'm kind of in fact, it's quite interesting when you have conversations with producers. I don't need to maybe spend so much time talking about your ability to explore and make discoveries. You've got that with your projects. I'm looking forward to understanding whether this growth can continue. You hit guidance 44,000 ounces. You've talked in the past of going from 60 to 70 to 80 and beyond. How are you going to do that?
Well, at the beginning of last year, we've been for a long time a plant constrained business, so that's actually throughput. So we've just made the best of our process plant. We've done that by not building a process plant at Coringa, as you recall. We truck ore from Coringa, we high grade it with an ore sorter, we truck a pre-con to Palito. We feed the Palito plant with Palito ore from the Palito mine with its ore sorter. So we're feeding our plant constrained operation with the best ore we possibly can to get us to about 60,000 ounces. After that, it's plant expansion. We believe the plant expansion, the right thing to do is it's actually at Palito. So in order to do that plant expansion, we've been following a pretty aggressive exploration program at Palito and at Coringa, where we drilled about $12 million worth of drilling last year. We're going to do the same this year. And the objective of that is to move from a 1 million ounce resource inventory total to about 1.5, maybe up to 2 million. So the idea is at the end of 2026, end of this year, we're going to be at about 1.5, 1.6 million ounces. And from that, we can obviously justify and support a greater throughput rate. And that will be achieved by adding more milling capacity at the Palito plant and getting us up to sort of, I think, 70, 80,000 ounces. The good thing that's occurred, so just on that point, we're about midway through that process. So we will be putting out new resource updates at Palito and at Coringa, hopefully before PDAC, probably just after, to be perfectly honest, but sometime in March this year, which will hopefully get us to the 1.3 million ounce range. So we're midway on that journey to get to 1.6. But, the other thing to consider here is we are enjoying phenomenal gold prices. And we mustn't forget our old mine, Sao Chico, which never got exhausted. We just closed it because being plant constrained, we didn't have space to continue mining that deposit. It was marginal, really, at the time, with the gold price we had of the day. But at these gold prices, Sao Chico is very, very much a viable business again. So we are not waiting and standing on ceremony, waiting for the results of the resource updates, who I've just talked about. We're already putting in place plant expansion at Palito, ready to start increasing the throughput in the second half of the year and readiness for 2027, when we'll be looking at exploration success at Palito and at Coringa and a possible, probable restart of Sao Chico as well. This is how we're going to get to 70, 80,000 ounces.
So the kind of there's investment required for all of that, and the sequencing is important. And say being plant constrained will be a nice problem to have. In terms of seeking those efficiencies, the most efficient way in terms of the best use of capital, how do you see that? Is it on exploration? Is it on things like ore sorting? Is it on process? Where's it going to come from?
I don't want to sound arrogant, but we're generating so much cash at the moment. We can fund it all out of cash flow comfortably. We can't spend. We can't really do much more exploration. We're doing loads already, absolutely loads, and it's very affordable. And we're doing that. The plant expansion, this is not a big cost of money. We've already got the ball mills from the redundant plant at Coringa, which we're never going to build. So the ball mills are already at Palito, ready to be installed. We can do all this out of cash flow. And starting up Coringa, we can fund it all out of cash flow. We're not going out looking for more money from investors or raising debt or anything. We've actually just paid off what little bit of debt we had left, which is about $7 million. We just retired that in January. And so, we've done 3 consecutive 12,000 ounce quarters, Q3 24, Q3 24, two. We've done Q3 24 and Q 25 and Q4 25, and if we're probably going to do about 13,000 ounces in Q1 2026. And our costs are pretty flat, but the revenues are just going up and up and up with this gold price. And the difference. I mean, Q3 last year we made about $6 million profit. Q4 was like about 9. And with these gold prices, we're now gone. It's probably going to be like about 13, 14. It's unimaginable, really. So again, all these things I'm talking about, they're not a wish list. They're a reality that we can do.
It's kind of interesting, actually. Obviously, high price gold environment is something that's kind of out of your control, but you take advantage of when it's there, for sure. You're talking about a sort of flatline cost. It's kind of surprising in terms of, I would have thought labor would have gone up, or diesel, and inflationary pressures are always there to higher or lesser degree. What's happening in Brazil at the moment with that?
Well, fortunately, that's very controlled. Labor is a very big part. It's 45% of our cost, but our labor is, essentially it's controlled by collective agreements every April with the National Mine Workers Union, which is largely valley controlled. So we just budget for like normally a 7, 8, 9% increase, which is what it is every year. So that's already accounted for. Diesel, which is a big cost, that's very regulated in Brazil and subsidized. So there's not a lot the Brazilian government has ever been able to do about increasing diesel prices. Every time they do try and do it, the country is brought to a halt by the truck drivers. So actually diesel has stayed very subsidized and very, very, it's a comfortable level for us. So between power, diesel and labor, that's 65% of our costs. We're a camp, as you know. Both mines are a camp, so we accommodate our workforce, and we feed them and we transport them to and from home. So there's a big fixed cost component to our costs. So we actually know what our costs are month on month. It's the revenue that's just going up and up and up. So that margin is just been. We've just enjoyed a great. And people forget, we all forget. We think, oh my God, gold's just gone to 5,500 now. It's a little over 5,000. But our average gold price, making all that money last year from 20 million to 54 million, our average gold price was 3,480. And people forget that. People just remember 4.5 because that was the last few weeks of 2025. It was in the low 3s for the first 6 months of the year. So if we're going to be in the 4s for most of 2026, we can have a good old ride.
Yeah, you are. And look, and I think the old adage of sometimes you need money to make money is the case. If you think back to the 2018, 2019, 2020, it was like hamster wheel time, running to stand still. With this very different environment, I'm interested in the sort of things that you can, the sequencing and order play in terms of how you drive that scale, how you make decisions around, cut-off grades and ore sorting, and, worrying about, how can you maintain those sort of flatline costs base where you are and where the growth is going to come from. So I think I said earlier, what's the best use of your money today? I know you can do everything that you want, but what are in sort of priority order? What is the most biggest return on invested capital at the moment?
Well, we as I said, last year we did 44,000 ounces. This year we're aiming between 54 and 57,000 ounces. So it's a very meaningful increase on what we did last year. And we believe we can do it. It's not a stretch target. It is a stretch target, but it's a very achievable target. And we feel very, very confident we'll do it. And certainly the first half of the year will probably be a little bit more modest. The second half of the year, we're going to really be pushing on and getting some big numbers in those quarters. As I say, the exploration kind of looks after itself. The $12 million there. It's the biggest return for us is putting in a fourth ball mill, which we're doing right now. That'll be operational in Q3, and then we'll be able to increase product. We've got a lot of stockpile material at Coringa, which can come across. We've got stockpile material at Sao Chico, which can come across, and we're expanding both mines. We're ramping up both mines to feed that plot. That's our biggest bang for our buck, without a doubt. And that's going to be our. That's going to be, no real increase in labour, no real increase in activity. It's just going to go straight to the bottom line. Those extra ounces that will be coming in, and that will be then feed into 2027 when we'll probably be doing another incremental rise, and we'll be north of 60.
Yeah. Okay. Understood. So operationally is probably the focus, but obviously increasing the resource. You talked about getting up to 2 million ounces. Obviously important in terms of the data that you've got around like which zones to focus on, Serra South or Melo or Palito, depths, extension, etc. Are you sort of very clear on where that 2 million is going to the additional ounces to get you to 2 million is going to come from?
Yeah, we are. I mean, the fantastic thing about the ore sorting, it's so good. It's going to allow us to mechanize Coringa more, because I think we've now come to the point where the ore sorting works so well, it probably allows us, I don't want to sound like this is a cop-out, that we're going to mine badly because, we'll get the ore sorter to sort the problem. But frankly, that's exactly what we can do. We can be a bit more mechanized, which means we can get faster throughput, we can mine safer, quicker, and it can go to the ore sorter, and the ore sorter just basically screens out, scavenges the ore, and discards the waste. And that's going to make life a lot easier for us. As I say, I don't want to talk a great deal about, I do want to raise the situation of safety. We had a fantastic year in 2025 and with much improved health and safety statistics, a record year. We had record production. We had more people joining the company. And even with more people joining the company in record production, our actual health and safety stats really improved. And we had about 7 LTIs only, which is a great result. I've just come back from a site visit with the board. We had a fantastic week, and then tragically last week we had a fatality at each of our 2 mines. The first mine, very sadly, was unfortunately an individual just ignoring a very clear safety guideline, and he had a fall, and that sadly ended in a fatality. The second accident occurred at Palito, which is a traffic accident. And all I can say at this moment in time, it seems to be suspicious, and it's in the hands of the police. So it's very unfortunate. I can't really say anything more about it, but it goes down as an accident in the mine, which is a fatality in the mine, which is tragic. Well, we are really doubling down on our efforts to improve that. So, but one of the biggest incentives we've got is mechanizing Coringa, which is not only going to help our production growth, it's actually going to make mining easier and less risk as well, which is important. So, as I say, that's probably one of the biggest initiatives we're going to be doing in 2026, mechanization of the Coringa mine.
Okay, look, Mike, and I appreciate you bringing up the 2 fatalities, not skirting around it, and I'm sure you'll tell us more when you know more. If I kind of sort of return to the situation around how you allocate capital and what the biggest returns are, your shareholders are also going to be asking the same question. So have you got a sense of whether your shareholders are looking at maybe shareholder returns, dividends, or do they like what you're doing with the cash in the ground that's kind of driving that share price up?
No, we made a very clear commitment last year that when we did the secondary book build, and we basically dished out or recycled some of our stock from our 2 big shareholders that were into new hands. Yeah, our commitment remains the same. It's our intention, as things stand today, to do a shareholder return of around 25% of our free cash flow from 2025 when we finish do our year ends back to shareholders. It's only right, and I definitely want to do that. So that's one thing which we want to do. I feel we're this price has helped us enormously to be able to achieve that. I think that will be our objective. As I say, exploration wise, we're doing as much as we can. I think we can't sensibly spend more on exploration, otherwise it gets a little bit out of control, and you're not doing it in a very disciplined way, and you could just waste a lot of money on exploration if you just go wildcat drilling and create. We need to drill and analyze and drill and analyze rather than just drill. We don't want to go down that road. We're doing just fine. I mean, $12 million is a very healthy budget and a very healthy exploration effort, and it's a lot of work. I don't think we do more than that. So the other use of cash, yes, shareholder returns, dividend, share buybacks. Haven't quite decided quite yet. Well, we take soundings from various shareholders, and one man's meat, another man's poison. So we'll have to see how that works out. But that's certainly that's on the agenda. Yes.
Nice to have the option. Just on the resources, just to come back to the resource, apologies. In terms of what amount of resource growth do you think you're going to need before you seriously consider kind of phase 3 plant expansion?
I mean, so our objective is we want to get to say 1.6 million ounces, which I think we can get to by the end of this year, and I think that would be sufficient to support without Sao Chico. That would be sufficient to support a throughput rate of around 80,000 ounces. And I think then if we consider Sao Chico as well, and so 2 or 3 other little satellites around which we're talking to, and possibly as well, we can be knocking on the door of 100,000 ounces in 28. That's kind of where we're thinking. And of course, we're always on the lookout for the right type of M&A. There are private opportunities, mostly in Brazil, which we're always looking at. Some within striking range of our plant, some not. But they're all being analysed all the time. It's all part of the job.
But isn't it sort of a rather competitive environment, or is it all kind of relative? If you're all rising at the same rate.
It is a problem now with this gold price that everything is just. I mean, you saw the Equinox deal with the Chinese. I mean, there you go. That's exactly case in point. No one wanted to buy. Well, it was much talked about for a long time, and even we were kind of looking at that. But when we saw that deal, we thought, goodness gracious! I mean, that is crazy money.
It's crazy money, but it's also. There's a whole bunch of problems there, obviously. But your options are what? Look at other public companies which have gone up in price, great expectations. And I was speaking to one M&A banker a couple of weeks ago. He said, been working on a deal for ages, but by the time it kind of got to the point where the paperwork was drawn up and it's everyone's agreement, the numbers have shifted so dramatically that it just
big retrade. Yeah.
The problems you have to deal with. Likewise, you've kind of got the organic option, and I guess there's a bunch of private stuff out there as well to look at. Is it distracting at a moment like this, or is it essential?
We're a small team, and yes, we as you know, last year, Matt, we worked on 3 things last year, and it was enormously time consuming, and none of them came off. One was a company interested in Serabi, and one was really didn't get anywhere, and the other one was Serabi looking at something else, and none of them occurred. And they are enormously time consuming for a small team of people, and therefore it's quite good to just have a little bit of a breather and just enjoy accumulating a vast amount of money. Look, I'm going down to 1-to-1 in Cape Town this weekend, and I'm going to PDAC, and I'll be inundated with people trying to find uses of our money. So it is. You just got to work your way through them. There's lots of people trying to take our money off our hands and get us to buy something which we really don't need to be buying. So we are focusing. We are trying to be very disciplined about this and looking at something that really would make sense only. And if not, we don't have to do anything. We're doing just fine, growing organically and delivering on our guidance. And we've got enough resource already to actually have meaningful increases each year, which we've gone from 38 to 44 to 54. The next year, hopefully, through 60, 65 maybe. With these gold prices, it's we might not be the biggest, but we're certainly making a lot of coin.
Yeah, I think more of the same, please, from Serabi. It would be the cry from your existing shareholders, and I think I'll leave you with this question, which is: if I'm a shareholder if I'm a potential investor and a shareholder in Serabi, have I missed the boat?
I don't think so, because the one thing which I constantly get asked about, and it is still very much out there. I've not really talked about it here. it's Coringa and it's permitting. We found a very sort of eloquent solution by not having to build a process plant at Coringa, which has really taken the heat off the permitting at Coringa. We've now got a chemical-free plant there where we just pre-concentrate the ore and goes. We're making progress with the indigenous communities there, which is great. We're certainly in consultations with those guys. We're making real progress. There's two things we need to do at Coringa to get the full license there. To build the plant, we're not going to build, I repeat. But to get the full mining license, which means, we continue, it is a change of land use agreement with INCRA, which is the land registry. That is nearly there. And hopefully we're going to be able to put that out in the news fairly soon. And that's going to be a very good indication. Secondly, the A&M, the Ministry of Mines, are working with us regarding an actual increase and a potential extension of our mining license there, which we're currently operating under, and we're obviously working with the indigenous on an agreement with those guys as well. So I think this year is going to be a year of, all being well, positive news on final permitting at Coringa, and I do think at that point the last lingering doubts over Coringa will hopefully be extinguished, and then I think at that point we will, there will be still potential, growth in this company and growth in the price, etc. As those shackles come off, we really can, take off at Coringa as well as Palito.